In this video, traders, we're going to look at, do you need the candle to close before it validates the signal? Stay tuned. Hey guys, warm welcome to you. All right, so here's a question that I often hear quite a lot, and it's a pretty valid question. When you're trading a specific strategy or specific setup or signal, do you need the candle to close before you take the trade or not? I'm going to give you kind of two viewpoints on it, give you my viewpoint, and I'm going to give you other people's viewpoints, and then I'm going to see, you can decide for yourself what you think. Comments in the comment section below before we get going to see what your thoughts are. All right, so if we look on the side of the camp that is you definitely need the candle to close, the idea being that if you got a daily candle, of course it could come up above resistance. If it doesn't close there, it could easily kind of reverse, and that becomes an almost reverse signal, right? If it pushes up and pushes down straight away again, then you've got a like pin bar, a wick, whatever you want to call it, and that actually is a reversal candle as opposed to something that closes above. Now, I agree 100% with that, right? If you're trading for something, and I've got silver up here on the chart here, you can see it up there, you know, something that's relatively in a range-bound environment, or you're waiting for specific support or a specific resistance to break, then my feeling is, yes, you need the candle to close to be valid, because you're in a range-bound environment anyway. Okay, so the likelihood is you're going to stay in the range. So by jumping the gun and diving in too early on the trade means that you're kind of going against what the current market conditions are. And so waiting for that close, the extreme close, gives you the added confidence that this is legitimate. And you know, if it does close above it, you know, it's a strong day, closes above a decent resistance level, bang, that is a clear signal in itself. If it just goes above it intraday and then unwinds in the rest of the day, it's just exactly what it was before. It's just faking out people, and you don't want to be one of those suckers who's buying that high or selling that low, especially if you're in a range-bound environment. And that's just my caveat to it, guys. If you're in those conditions where it's rotational market, it's mean reversion type market, it's just sitting there doing not a lot, like perhaps silver was for this period of time, then, you know, buying highs, intraday highs off a new high, it doesn't make any sense. You've got to have that candle to close. And I would say that even on the lower time frames, that makes sense as well. But if you look at something like Dow, for example, recently, or in fact, you know what, let's go with something like a stock like Facebook, okay? If you were in a different situation, a different environment, okay, and you had a breakdown environment, in fact, you know, we'll go back to the Dow because at the moment it's a great kind of cherry-picked example. Yes, I am cherry-picking, but I'm just doing it for this video. You know, you don't necessarily have to wait for the candle to close. If you're already in a trending environment, for example, this last period here, and you may be different when you're watching this video, obvious kind of very heavy selling pressure coming into the close of the year. If you were trading that on a breakout to the downside type strategy, then you don't need to wait for the close, because by waiting for the close, you're probably going to miss a massive amount of juice. And so the current market conditions play an awfully big role in whether you wait for the close or not. In the silver example or rotational market, yes, I want to wait for the close. In this example, in the Dow example, or any trending market example, you don't necessarily have to wait for the close, because you're going to be, you know, very late in the move, because the idea is if it's literally expanding the range, if it's trending, if there's a lot of aggression in the move, then a break there, yes, you're vulnerable to it faking out, coming down, but if the trend's in your side, then the kind of extra juice you get gives you almost a cushion by taking it on the break, and then the close is there and you've got that cushion. Whereas if you're waiting for the close, you're almost buying it a full stretch. And yes, in some instances that's going to pay off, but in other instances it might just literally be the last kind of push of money coming in before it unwinds the next day, or at least pauses. So in reality, it's what the market is doing, guys. And this is my thought on it. And let me know your thoughts in the comment section below. If you're in a rotational market, yes, you must wait for a close. If you're in a trending market and you're in a kind of trend type trade, then no, you don't have to wait for the close. That's what I feel, and that's the way that I trade it. Now, you may agree, you may disagree with me, but I think if you kind of use that as a benchmark and say, oh, you know what, that makes sense, let me see how I go, and look at it in the market you're trading and how that integrates with your strategy. I'd be interested to know, how that works for you and the kind of strategy you trade. All right, guys, should you wait for a candle to close or not? Those are my thoughts. Take care, whatever you're doing. Bye-bye.